I think to answer the second part of the question first, I guess whatever doesn't kill you makes you stronger. Basically, markets tend to be somewhat hysterical sometimes, and I think that's also part of the news cycle, is when we see something different, it's human nature to want to talk about it, to want to focus on it, and then we'll see where the reaction takes us. One of those conditions is the inverted yield curve. Few trading sessions ago, the market freaked out because the 10-year yield slipped below that of the 2-year yield. Normally, a yield curve is what we call upward sloping, where longer-term interest rates are higher than shorter-term interest rates. That's not the case in the U.S. It actually hasn't been the case in the U.S. for some time, where short-term rates have been higher than 2-year or 5-year rates for a long period of time. But the 10-year rate has been above the 2-year rate until recently. Sorry, there's a lot of words in there, but I'm trying to talk. Picture does tell 1,000 words, obviously. And so what happened was people were very nervous. Oh, the 2s-10 spreads inverts. And the reason for that nervousness is historically, what they call a 2s-10s inversion has a fairly high correlation with recessions. It's not a foolproof predictor. But the bond market has a very good track record of predicting the economy. Not always perfect, but more often than not, it gets it right. And so it's flashing a signal that worries a lot of investors. So it was a bit of a freak out. We saw one of those sessions where equity markets fell precipitously. And then we've sort of meandered along. We've definitely been on a lower trajectory, but that news in and of itself is no longer enough to send the market lower. And as a result, we rallied Monday this week with that condition in place. Another situation that freaked the market out a few sessions ago was the fact that the Chinese currency, the renminbi, was going to be more than 7 to the dollar. That 7 level has been a big historical line in the sand number. Again, after seeing that happen, we now see the market doing its own thing with a 715, 716 number attached to it. So yet again, that crossing through that number was not calamitous. One of the things that happens is there's what we call stops in the marketplace. And a lot of times, you're probably familiar with stop orders or stop loss orders, whatever, where if the stock goes below $40, I'm going to sell it. Well, that happens for asset allocators as well. If the yield curve inverts, well, then we're going to pull back our exposure to economically sensitive stocks. Sometimes the numbers are a little artificial. 7 in the renminbi is a little artificial. So more because that's been where China has been more historically willing to support their currency, and in this case, they were demonstrating something by letting it fall. That's got meaningful points of view on the trade front about the efficacy of tariffs, but as of now, that number in and of itself is not enough to sink the markets. The long and the short of it is there'll be all sorts of things that you'll hear about, potential triggers that can bring chaos or calamity. On an individual basis, yeah, a lot of them, they could. But more often than not, when it's an arbitrary number, what we learn is the market freaks out, often for good reason, but then digests that news like it does everything else. And that becomes one more data point for traders to use as they go forward.